All right, all right. We got microphone levels. All is good. And we are going to review the markets, kind of take a look at Bitcoin, take a look at the greater market, see if we can make any money. Let's take a look at, just kind of want to start out the day here and just take a look at crypto on the month. Right, here we go. Top 100 coins. It's looking pretty bleak. It's looking pretty bleak if you're a bag holder. One of the things about altcoins is that the only way you're going to make money on altcoins is if you trade them. Gone are the days of you holding onto a coin and getting rich off of it. I mean, maybe. I don't know. Maybe, but I doubt it. I think those days are gone. I think you need to stick and move. I think you need to learn how to trade. These smaller coins, they're always going to be subject to super volatility. But if you pick a bigger coin, you learn how to trade, just basic skill set. I think you can make some money. But yeah, on the month, crypto looking bleak. On the week, equally as bleak. Like if we look at hype there, yeah, hype just 2% from the week to the month. On the day, saw a little bit of green on the day, right? That's about it. Let's take a look at the news here. So today we had unemployment claims, and tomorrow, nothing, right? So I'm guessing that today we probably had, let's see how those unemployment claims came in. Okay, so CPI came in under. Unemployment came in right on point. Philly Fed Manufacturing Index. To be honest with you, I'm not sure what that is. I'm not sure it's a market mover, but it came in way way over. The forecast was 2.5. Yeah, I'm not really sure how that works. Um, this week is a leading indicator of economic health. Business react quickly to market conditions and change their sentiment. Okay. Why traders care, right? This is why I love Forex Factory, man. Get a little bit of knowledge. Okay, yeah. We're gonna go over here to Trading View, and we are going to take a look at market context and just see where we're at, see what the market is doing. And as you can see here, I mean, we're just literally just going sideways. This is this is like par for the course when it's low volume, close to the holidays, not really much going on. I mean, we could look at this on the daily profile here on Exo charts. I'm going to refresh here. And we'll probably be seeing just like a low volume sideways action. So if we bring up the days here, right, bring up this footbar print statistics, you know, we've got some trading in the billions here. This was probably New York session. And then today, starting out kind of slow. We're opening inside, right? So we have our daily open here, which is inside previous day value. We had to open here. So, I mean, you look at it this way: open, close, open, close, open. So for the last open, close. So that was $1,000 move. So no matter what Bitcoin has been doing, you have to realize that we're basically closing the day where we open the day. We might see come on up and tap a level, but basically we're finishing off the day. It's just ranging, right? We're seeing some big moves here, but nothing really super crazy. So, I mean, that's the context, right? We got to keep it simple. And the simple context is we are moving sideways in some kind of crazy corrective, right? It's just sideways action where we're at in that process, right? We're back inside value. We've hit the point of control. I mean, do we go to 90,000? It's possible. Do we have any confluence there? We do have a weekly level that was previously just front ran. Do we have any naked points of control? So we do have some magnets up here at 92,000. Definitely could be the case to head on up there. But the market is just sideways. Zoom out a little bit, and take a look at the bigger price action. And why I love Bitcoin when I started learning Elliott waves from, Daniel and the guys at Chart Champs is because, well, it could tell me, all right, am I in some kind of impulse here or am I some kind of corrective structure? And when I'm in a corrective structure, really it follows a loose set of rules. And so corrective waves, I mean, this is a classic corrective wave here. This is a classic 1, 2, 3, 4, 5, right? And so in a bigger 3-wave correction, which is what I think we're looking at, right? We would see, sorry, that's my daily training plan. We would see a 1, 2, 3, right? And we don't ever want to get back into wave 1. So, or actually, I'm sorry, that's way down here. But yeah, I think that's in the cards. We know that we have a lot of volume here. We've got a lot of confluence right here. And that could definitely be a 1, 2, 3. And then the process starts all over again. I mean, it's just fitting of everything that we have seen there, right? So if we take up and we're just going to project out and we're just doing some projection. So let's say here, right? We could even do a little bit of work here. We could say, right, this is where we began to correct. If this is the bottom, if this is it, right? A, and then we come on up here to, right, maybe somewhere here, right? And then we've got a golden pocket down there. Or if this is not the bottom, actually that would be right around there. See, that looks okay to me. If this is the bottom and we make one more rise to the upside, right? One more rise to maybe even 96,000. There it is, 96,000. Now we have point of control, golden pocket, maybe even some VWAPs. Look at that. We have our all-time low VWAP from FTX low coming up here, right here in this golden pocket, point of control. I mean, it just makes sense. I would love to see it. I would love to see that. Boom, 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 and then start to come on up. We can get an idea of what that looks like with a little Fibonacci time, right? So how would we do that? We would basically say, let's get out our Fibonacci time here, right? From our bottom, top, bottom, right? Top. Actually, let's do some other stuff here. Let's see if we can find the top, bottom, top. And I mean, it almost marked the top. It was off by 3 days, So if we repeat that same process here, if we go top, bottom, or bottom, top, bottom, right? Impulse, correction, top, and let's just say we found the bottom, then we're correcting until April, right? That's saying that maybe just up, right? And then a slow grind down, bam, and then, right? Because the time that it takes to make a top and then a bottom would be the time that it takes to make another bottom on the correction. Just something to think about. Don't marry it. Other than that, let's do our process, right? Let's start off always on the high time frame levels. No new monthlies. Well, I have this monthly support marked out there at 71,000. I like it for coming back for a little bit of a retest. Let's go here to the weekly. That weekly level was just ever so front ran. So I leave it on my chart right there. If we look at this even on the 3 minute, you can see yeah, I guess that's tapped. That was a beautiful level. Coming back here, we go to weekly. So that weekly level is most likely tapped. I'm just going to leave it there for now. Let's go to the daily, see if we have any new daily levels. We do have possibly a new daily. We've got a daily open there. And that's it for our horizontal high time frame levels. See what we got for some MPOCs. No new daily MPOCs. And of course, no new weeklies because we don't have a new week. So we do have that 77 250. This pen sucks. 77 250. And 121 100. We're a long ways from that though. Anything can happen. And monthly is at 11300, 111300. All right. Let's transfer those MPOCs real quick. $92,375. Let's start to stack our levels here. 82,000. I didn't see that. Where's that? 82,000 right there. That's coming back here. All right. 82,000. 92,375. And so if we start to already start to think about where our next trade is, right? We would see that, I am going to get rid of this weekly level. We would see that where it starts to get thick is down here, right? Weekly naked point of control. This is going to be a big zone here. This 75 to 70,000. I could see a world where now how you approach a level is significantly important too, right? So if we came in here, faked everyone out, and then we just crashed down hard, like Christmas Massacre, right? And if we did tap this, I'd be very aware of sweeping these lows. In a perfect world, we came down super hard and wicked through that and came back up real quick. If we made our way back above this weekly and this daily, see, the MPOCs for me are levels that get tapped and they're reactive. But the levels of weekly and daily, these are the levels you look to reclaim. So you look for a wick to travel through that, but then you look for a market structure to really just bounce and reclaim this. And of course, you want to be paying attention to the delta and the open interest. Ideally, you want to see some trap traders in here. You want to see high interest. Here's the grand slam. If I see a wick go through this and then come back up quickly, and I look on the delta, and right on that wick, there's some big open interest with negative delta, I know there's trap shorts. From there, what I'd like to see is on the low time frame, I want to see something like this right on that daily. I want to see it come, actually, I want to see it come through, back up, and then come back and double check, and then make my way up. And really, if I saw the trap traders and I have an invalidation with a nice wick and we went right back up, that's cool. If we trap traders, typically we don't want to go back there. We don't want to let people off the hook, right? You might see come down here and do a flush of open interest. You might see open interest tap out. Now, if that is open interest going out and the delta is negative, and then we still form a reclaim, that's still bullish for me too. Where it isn't bullish is if I see a bunch of people longing in there. If I see a bunch of open interest in green delta, then I would safely probably wait for another low to come. And then that's how you get that inverse shoulder, head and shoulders, right? Bait them, trap them, retest, off you go, right? So that is one trade that I will definitely be looking for is right there. Another trade that I'm be looking for, but I'm going to be a little bit more gentle with it, is I like this daily and this naked point of control right here at this 92,000. I don't know why, but and I know that it's not a strong level. It's taking highs it's taking local highs, but it's not taking the liquidity. Ideally, if you want to see a bigger drop, you want to see us come up, right? And then that's kind of what we're doing. We are kind of still parallel channeling, right? So we want to see this and then come for the bigger drop, because this is really just a bear flag in essence. So let's look at some volume. Going to look at our local range here. And we're going to drag this over and just update some volumes, right? Right here. Bring this up to current. So we can see we're still trading outside of the value area. This is like a little bit of a failed auction all around. We traded below and then we traded above. It's like a double failed auction. It's a very tricky time to trade. I mean, I haven't really taken a trade in days, just because actually I did take a trade and I did win the trade, but it is a very tricky time to trade. So don't be afraid to spend time with family. Severin said something that was very, very, very good. So I was watching his live session and somebody was remarking that they doubled their account in a week. And he was like, that's awesome. And then they said, and then I lost it all. He said, well, that's not awesome. But the advice that he gave him, he said, refresh, start over, and take less trades. Trading is an interesting career because everything else you really want to stay busy. And in trading, non-action is the action. It's waiting for that setup. You instinctively just want to get in a trade. You want to be in a trade, but waiting for the right trade is really what makes the difference. So that's our volumes. And so now I want to take a look at some VWAPs. So now the all-time high VWAP is still making its way down. All these levels are scattered. I mean, this really takes the power out of this 96,000 too, because now we have a situation where the all-time anchored VWAP high is dipping lower than the range POC. So what this does is that on the lower time frame, when we come up here, if we bounce off that and then clear it, then it's just going to act as support. So it becomes a really tricky time to trade here. I'm not going to lie to you and tell you I know exactly what to do, because I will still be looking for a trade in this section. It makes sense. Range POC, all-time high anchored VWAP, taking the liquidity of this little range that we have here. Daily level isn't really going to be in the way, right? So this maybe something like this, right? Maybe a little tap, bounce, tap, and then back, range high, outside of the range. At the end of the day, we are still trading in this channel. So, I mean, I could see something like this in the mix, right? That could be a definite scenario. If we lost this range POC, that would definitely be a short for me. So losing the range POC is definitely a short for me. This level here is a level I'm interested in scalping, this 92,167. And then ultimately, the big next trade that I'm looking for is down here at 78,000. 78, 77,000. I have a feeling that when we get down here, though, it's going to be pretty shaky. So let's take a look at some local price action. Let's just drag these over here. And these are going to be my next trade areas. And now we're going to go to ATAS and we're going to get an idea of just what's going on locally here. Caden had a big question for me today. He said, I'm really confused on how to use order flow to get a directional bias. So I'm going to show you. when you're looking at this chart, or when you're looking at any order flow chart on the 30-minute, that's going to give you a good view of the day, and it's going to give you a good view of the couple days that have passed. Now, as you can see here, we have a high and we have a high on CVD. We have a lower high and we have a higher high. This was a bearish CVD divergence. When you see this at the highs and kind of in between, you want to look at what open interest is doing. So as you can see here, I'm gonna tell you, Caden, I'm speaking directly to you now. As we're going up, you can see that we went up on weakness. We went up on weakness, and all there was buying. So there was buying, but there was a decrease of open interest. So that isn't a strong move to the upside. When I see us going up and the open interest is decreasing, then that's not a strong move to the upside. So then you see open interest increase right at the top, and it was 15 million longs. This is super bearish. When you have a bearish CVD from your previous high and you have an open interest increase with a bunch of longs or positive delta, you know if we lose this level, that is a short all day. That is an all day short. Take it down to the bottom of the lows. Don't get greedy, because you're seeing here what you're looking for on this chart is the highs and the lows, and you're looking for those divergences. For example, low, low, equal low, lower low, bullish. We move up, right? So low, open interest is flat, but when we're coming into it, we saw a big open interest increase right here. What are those? Those are shorts, negative delta. So you have shorts here, right? And then here, bounce, CVD divergence, decrease of open interest. So everyone is selling, but everyone is getting flushed out. So you want to say who's getting flushed out. So if we start to see positive delta, right? Or positive, delta with the open interest decrease, then they're buying the way out of the longs, right? The longs are getting flushed out. They're selling. You're coming in, and we have aggressive sellers bounce to the upside, and then we have a high. So we have a high, open interest increase with mixed bag, half shorts, a lot of shorts. So a lot of shorts came up in the mix here, and that played out. Low, low, high, higher high, bearish, plays out, low, open interest increase with positive delta. They're longing here, right? They're longing at the bottom. They're doing it right. And now we want to pay attention to these lows. As you can see here, we have a low, we have a lower low, kind of. And right here, we have a little bit of a bullish divergence because price is going down and CVD is going down. Little bit of a failed auction, move to the upside, right? So locally, there is no divergences to speak of. The bigger trader is not gearing up for anything really that I can see, right? Because we got here a low, then we got a higher low, and then a little bit of a higher low, right? So you look at the lows and the highs, and then you look at the open interest. And with that information, you just paint the picture. You cut, right? First of all, if you see a divergence, you want to ask yourself, is this absorption? If you see a low and a lower low on CVD, and you see a higher low on price, then something is stacking limit orders and not allowing price to go down. So if you see a low and a lower low and open interest increasing with negative delta, you immediately know these shorts are going to get fucked because there's an unseen force in the market that is stacking limit orders, not allowing price to go down. Right? So it's very, very rarely that retail wins in those scenarios. So in that case, you have a low, you have an invalidation, and if you're at a key level, you can take a trade. So that's how I use that. Let's look at some profiles. So we've got our daily open here. We've made a move to the upside. We've got some single prints here at 86.5 that will probably act as support on previous day's point of control. So we are opening out just barely outside of value. So how is this useful? Well, this information is useful because when you take the previous day and you see if you open inside of value, then, I mean, most likely there's a high probability it's going to be a ranging day. When you open outside of value, you have a higher probability of price wanting to go seek a new level because it's already confirmed the previous day levels. This is why the profile is so useful. If we open inside previous day's value, right? We've already found value. So we're going to rotate. And if there is going to be a big move, you're probably going to see it. You're probably going to retest a previous day's point of control or something. But when you open outside of value, either you're going to get sucked into the previous day's value and make the full rotation, or price is going to go seek something else, right? Price is either generating liquidity or it's looking for it. So just always remember that your profile type of your previous day, where you open, your initial balance, these can give you an edge on the competition of where price is going to go. All right, let's tie it all together. Basically, we've had a little move to the upside. Nothing, not really anything to be in a big deal about. I'm looking for a scalp right there at that high time frame, daily level, and an MPOC. That's going to be 92,375. The bigger short I'm looking at is coming there at 96,000, and that is just going to be playing right off of our channel. And that is also going to be our greater range point of control. So how am I going to play these specific trades? Well, like this. If we come up here, I'm going to be looking for just a quick reversal pattern, maybe come on down here and make a higher low because we are channeling right now. If we come up here, I'm looking for us to take the liquidity above these levels and then maybe form a little shoulder, head, shoulder. I'll look for some bearish divergences, anything that gets me back below that point of control. That point of control is going to be my marker and also the anchored VWAP. But I have to see trap traders up here because once we flip this, we do have that anchored VWAP that we're going to have to contend with. Other than that, if none of these play out or if these don't look good, I'll wait for us to come on down and then I'll see what happens down here. I'm looking down here for that sweep of these lows. I want to get back up here, or I'll probably take it on a reclaim of this. If we give a nice wick, get above, trap some traders, and reclaim this, I love it. I'm taking it. So those are the three levels that I'm looking at. Those are my three next trades that I'll be looking at. Maybe tomorrow we get there. Maybe tomorrow we don't. Wait for the A+ setup. I will tell you this. I will be using this screen here. If some of you guys who have this template, I will be using this. And what will I be looking for? So I'll be looking at time and the width of the candle. As you can see here, we came to the downside and we didn't, where's the duration? So I'll be looking for a candle to form really, really quickly. As you can see here, right when we came back up, we see here, this candle took 6 seconds to make, right? Right there would have been your indicator. We are inside previous day's value. We're starting to create value, quick move to the upside. I mean, that is basically Severin's 3 candles or momentum trade right there. We can see here, right? Resistance, break. We didn't really get a good back test. We got a back test here, but that would have been a clean trade. So I'll be looking for a quick candle to form at a key level. And it's the same thing on the way up. Big, long candles mean low liquidity. Short, fatty candles that get printed in a short amount of time mean high liquidity. So if I see high liquidity at a key level and these candles are forming very fast, that's going to be a signal for my short. And adversely, if I see that at the bottom, it's going to be a signal for the long. Anyways, guys, hope that helps. If you have any questions, comments, leave a comment in the section here or whatever, in the chat or in the message. Let me know if there's anything you want to see, anything you want to learn, and see you next time.